Almost everyone loses money when they interact with IPOs. IPOs are initial public offerings. Everyone runs to the market, everyone buys, they buy incorrectly, and they end up losing money over the long term. And most importantly, the next Apple, the next Nvidia, and the next Walmart are inside of a certain IPO. When people tell me or ask me, Jeremy, what is the next Apple? What's the next big company? What should I invest into? The answer is always something that's new. When Apple was coming out, Apple was an Apple. Costco was a Costco. Amazon was an Amazon. No one knew they would work. So in this video, I want to share with you exactly how you can implement a system to create remarkable long-term wealth and potentially some short-term cash flow as well. I'm going to dive into a really cool scanner called Finviz. And the reason I'm going to pull up the scanner is a very easy system because I can click on screener here, and I'm going to do two things. Number one, I'm going to explain what market cap is. You see, market cap is how large a company is, the size of the company. The smaller the market cap, the more volatile the potential, and the larger the company can potentially likely grow over time. If I go into Finviz and click market cap, you will see mega is $200 billion or more. That's the larger, safer, more reliable companies that will be around for a very, very long period of time, right? That is the mega caps, the mega stocks. These are great for long-term investing, wealth appreciation, all those things. Now, if I'm coming down in here to mid cap, which is 2 billion to 10 billion, that means that the company is worth at least 2 billion and up to $10 billion. So if I click on that, I have whittled away like 9,000 stocks. And then I can also come in here and do an IPO date. So let's go to IPO open. Let me click on all. And let's go and pull up where it IPO'd, IPO date. And let's just do in the last quarter. And there you have 12. Now, here's what's interesting about these 12, because I do want to just simply show you how you can participate in these IPOs, because again, almost every single IPO eventually is going to open and go lower. Oh man, it looks like I need to buy this one. It has my initials, JAN. Holy smokes. Okay, so here's some cool math. Let's just pull up this one, Jan, because it's my name. I think that's kind of dope. All right, so I'm gonna pull up TradingView. I'm gonna show you some math, and I promise this is a revolutionary strategy that will truly help your money and your wealth. So ticker symbol Jan's Living. Now, I don't need to know at all what this company does. I don't need to know any of the information from here. What I can do is once the company is IPO, that means it's an initial public offering. The company is public, it's available for everyone. The reason that I personally am selecting $10 billion, which has tres comas, three commas, the reason I'm selecting $10 billion or less for an IPO is because that tells me that I can still get a lot of volatility. I have the chance for massive growth and massive upside potential, and the likelihood that the thing absolutely rocket ships and could increase dramatically is quite large. I will show you some of the other larger IPOs in just a moment that came out that haven't really done that much because they're already too big when they come out. Just again, my opinion, but the overall thought process. When you buy a stock, the most amount of money you can lose is the investment on that stock. So if I go into Jan's Living and I buy $1,000 worth of the stock, what's the most amount of money I can lose on that investment? The answer is obviously $1,000. The stock can go to zero. If I put in $1,000, it goes to zero. I lose $1,000. Oh no. Is that going to happen in the strategy? The answer is yes. What is the actual strategy I'm talking about? The strategy is buying IPOs when they come out or near the time they come out, and you buy them with an amount of money that you're okay to lose, and then you kind of hold forever. Because eventually, one of these stocks will be an Apple type of explosion, or an Nvidia type of explosion, or a CoreWeave, or a Shopify, or a Square, or a Tesla. They are all IPOs at some stage. So here on Jan's Living, obviously you can do more research into the companies, you can do more research into the fundamentals, you can do more research into the CEOs, what the sector is, and come up with a likelihood of how they're actually going to win. But my actual strategy is taking $1,000, buying it in or around the open, and when the stock goes up 300%, okay, 300%, when the stock increases 300%, you sell half of your shares and hold the rest forever. That is a strategy that, yes, you will have to have some income, and you can change this $1,000, whatever number you want. And yes, it's going to require consistency and being in the market. And yes, it's going to require you to kind of be on top of things. But ultimately, you will buy an absolute monster with this strategy. You have to, because at some point, a stock's going to absolutely crush. For example, just this list right here, that one didn't do very much. That one hasn't done very much. That one hasn't done very much. That one, just one we're just looking at, that one hasn't done very much. That one hasn't done very much. Now, granted, they just came out, but this one, MDA Space is already kind of starting to pump. All right, MDA. So it hasn't been out that long, but again, just imagine you bought it here at 14.28. Has that increased 300%? And the answer is yes. All right, well, there is one. We got, that one is going straight down. OCTV hasn't done much. Let's just go look at this one. VCX, Fundrise Innovation. VCX. Oh, that was cool. That one could have been one. So if you bought it at open, oh, wow, look at that. You would have already hit your 300%. You buy that puppy at open, which is $33 a share. You would have hit 300% on the same day. And now you have your, number one, you have more cash flow. So $1,000 turned to $3,000. Awesome. You sell half, you have $1,500 worth of stock. And now you're just like, all right, cool. Let's see what VCX does for the rest of my natural born life. And then you can recycle that money and go something else. And as promised, let's look at two of the larger IPOs just so we can see what they did do. Here's Airbnb. Airbnb, if I go into the weekly chart, this was a recent, not that long ago IPO, 5 or 6 years ago. It's flat. It's done absolutely nothing. And that came out at what, $120 billion market cap. Let me pull it up really quick. Airbnb. Yeah, right now it's 81 billion. All right, 81 billion. The other one was Uber. So Uber, again, if you bought it at open, it's up 73%. Uber's IPO price, I mean, it wasn't quite as high as it is now. It's a $144 billion company, but it was a lot less than that. But not significantly. It was like $80 or $90 billion. Same thing with Rivian. Same thing with a lot of other companies. If they come out too pricey, too expensive, AKA SpaceX, you can still buy some, but just don't expect necessarily a 300% return. Don't expect it quickly. Just understand that it's going to take a long time for that company to grow. If the larger the company, the larger it's going to take to grow faster. That is the strategy. That is what I want to share with you. If you have any questions on the strategy, if you have any questions on the approach, or if you think it's unique or cool, hit that subscribe button, hit the alert bell, post in the comment section below if you found this helpful or unique or cool or exciting or anticipatingly wonderful, because I can assure you this can and will change your financial trajectory if you implement everything I talked about today in this video. Thanks.